What's going on, everybody? Ian Walsh here, Hard Money Bankers, joined by my partner Ryan Walsh from Hard Money Bankers.
Yo.
What's happening, Ryan?
Looks like we got the blue shirt, gray hoodie memo.
Yeah, that was not coordinated. So I like Omni-Gone as my title.
What are you talking about again? What's Omnicron?
You'll never know. You'll never remember. I need to trim my beard. My gosh, I'm gonna look like Santa. So
good time of year for that.
Yeah, on the news front, I'm not really seeing a whole lot. I have it on my screen. The first title is the market correction before Santa rally. Do you have it on your screen?
I do now.
Yeah, the market correction before the Santa rally has that begun? Maybe. I think we actually have more down. I don't think we've started into a rally just yet because, Powell says time to retire. Oh, time to retire. Word transitory regarding inflation. What does that mean? So you were listening to Powell speak this morning, right? Or
yeah,
saw what he said.
Yeah. If anybody is watching the market, there's a huge 400-point drop, which is we haven't seen something like that in over 30 minutes in a long time.
Mm-hmm.
So, I mean, my conspiracy side of me says the money moved on Friday, got ready for this, and they just said, I don't know, say Omnicron. People will believe that, right?
Yeah, I mean, and 3 headlines down. Three headlines down is this is the Friday panic. COVID cases in South Africa, Omicron. Wait, Omicron? I thought it was Omnicron. Epicenter decline as hysteria rattles global markets. So it was all just a cash grab. So
because money cares what's going on in South Africa, right?
Yeah, with Omnicron. But then the next thing is team transitory is dead after Powell says time retire. So basically they tried to make the move based on Omnicron, and they're like, that was them shifting their money. So they're all going to forget about that until today. Now the real issue might be coming out. The real issue might be surfacing here because they had to position the money first, and then we'll start talking about the real issue when Powell speaks, right? So, question is, I don't really know what this means. Do you?
No, I mean, it's the same thing what you're saying. Is this a correction before the Santa rally, or is this real? So, I mean, I don't know. It's everything we've been saying for several months. We got inflation, we got supply chain, we got Evergrande.
Yeah.
Until those things go away, I don't see the market going up.
No, but I think most importantly, and as I looked at it today, was still this chart, and even more so as I sat there and we were chatting back and forth. This is significant and remains significant. This area right here, that is where the market wants to go there. There's an old saying in trading, with enough screen time, you can just tell where the market wants to go. It's not like a measurable thing. It's just like a feeling. It's just like when you're walking down the street and you're likely to step on the next pavement tile, the chances are that's where you want to go. You can just feel it. You just know you're going to go there. So the market has that kind of feel to me right now where it wants to just go there. And that means that will take some more news to not excite everyone. So I don't think the news front here is done. I think we're going to be looking at a couple other things. But remember, from the start of this balance point situation, it's going to get hit, and it's going to get hit hard. And so far, we've seen some pretty tough moves coming into it. The drop straight into it, 400-point drop this morning in 30 minutes. You see some wild stuff into these kind of areas because there's big positions. Remember, every time one of these lines gets hit, that is, a big position that somebody took. Somebody was banking on that position. So when that line gets hit, people start shifting their money and shifting their positions accordingly. So each one of these lines represents more of a bigger position. But ultimately, it's going to come through. And if you're going to Santa rally, which for those that aren't familiar with it, it's a pretty common term. It's that basically there's a typical, a historical rally in December. So they call it the Christmas rally. The big money, they like to shake everybody up. and they need to buy their family gifts. So they shake everybody up, rail it down, and then bring it back up. But right now, a Santa rally to me would have to come pretty much off that balance point to do it, and then has to go back to all-time highs through January, February, March. But that doesn't fit our narrative. January, February, March is supposed to be a potential bloodbath, right? So what does that mean?
I don't know. On the housing front, I mean, the pricing, like we said, we've seen housing starting to sit on the market. The only ones that are selling quickly still right now, I'd say, are the ones that are fully renovated. But anything that's less than maybe 80% renovated, like it's sitting on market right now.
Yeah. So I don't have something here that screams to me Santa rally, because Santa rally would have to be It sounds like I'm saying Sanda rally.
Sanda rally?
Like this. Sanda rally.
Cinderella? Cinderella?
Oh, Sanda rally. This chart's going to get real jacked up. Sanda rally. So a Sanda rally would have to be to the all-time highs. So the problem is
got some room to move there to make that happen now.
Right, which is wild because you can cover the entire leg down in like a week, and it took us 2-3 months to get up to the these little bars like running up. Here's what essentially off the Evergrande took, and now it just like off a cliff, right? Which is normal. I mean, the market moves fast down, slow up, but I just, the way I look at this and I go, okay, if it's going to drop from here to that line, and then we're looking back at January, or then we're into January, right? So if we drop down there, it gets a little crazy, some holidays, market's slow, blah, blah, blah. Let's say we even bounce from there and we bounce up a little bit, maybe like halfway back up to like 35,000. Well, that 35,000 probably isn't going to come to be until like early January. So
if we get all the way down, right? That's what you're saying?
Yeah. So if this happens and we get all the way down and we come back up to early January, where does that leave us with the narrative? Because we're expecting bloodbath January. So to me, that sets up this is a very speculative play, but that sets up for a retest, a kiss of death. See you later. Right. That doesn't set up for unless we're completely wrong about quarter one and it goes back to all time highs to give you your Sanda rally. But that's not, I don't see the news correlating correctly to that price action. You know what I mean? Yeah.
I mean, what's interesting is he said, Powell said there's going to be a central dollar report in a few weeks. So I don't know. We will see movement one way or the other on that.
I think that could be the big underlying thing. That's a big one, because as soon as you start talking about crypto and from the Fed's perspective, and you start saying we're gonna introduce the digital dollar, essentially what you're really saying is we don't really have faith in the dollar anymore. We need to move this into something else because we're afraid to lose control, and that's the reason we're doing this. Because they wouldn't do it if they felt everything was under control, right? Like that just wouldn't happen. So. And then the market recognizes that. I'm not the only person I'm not making that up. The market goes, okay, like the Fed doesn't really have confidence. So everybody's going to go, okay, well, we should have seen this is how the story plays out. We should have seen that coming. Remember when the Fed was just printing 40 or 50% of all the money that was in circulation? That was crazy. And then, of course, we had to go over to a digital currency because we had no choice. How did we not see this coming? That was crazy. Like, that's how that story plays out.
Yeah.
I don't know how much blood you have to shed, though, to get to that point. That doesn't happen in a nice, smooth transition.
Well, I mean, they said they're going to increase their planned tapering because the inflation is higher than they expected.
Higher than they expected?
We didn't realize printing 40% more money would cause inflation.
But every other person who's ever existed and used a dollar has been saying for 10 years, this makes no sense. We didn't how is that? If they're saying it's not expected, we need to vote somebody new in there. We need anybody else. We need I don't know, my mom to be the chairman, because this doesn't make any sense that everybody, mother could see this coming, and then you're going to say higher than expected. That's a really terrible way to phrase that.
I mean, you're assuming it's being done with
Yeah,
the people's best interest in mind.
Face value, right?
Yeah.
But assuming face value, I mean, that's right up there with like when Biden, told the supply chain people to just work harder. Like, are you
Problem solved?
Problem solved. Like that's a really terrible.
It is going to be interesting though if they are going to increase the interest rates faster than expected, right? I mean, we're talking about it internally. 1% increase in a year could have a much more dramatic impact than people realize because of the buying power that it reduces from home buyers. So that would be, I thought the most interesting statistic that we were looking at is in the past 40 years, inflation has only gone down. So this would be the first time that we would see, or I'm sorry, not inflation, interest rates have gone down. So from 1980, when it was like 15%, right? Higher than us. It's only gone down for 40 years. So
it's historical what's happening, like in the lows.
Right. So this is the first time, because it can't go any lower, right? We're just about
it
zero.
Technically go negative interest. That technically could happen, but that's really not a good idea.
Well, it's looking like with inflation, they're going to start going the other way, right? Mm-hmm. So anybody in the real estate market, even if you've been here since 2008, you have not been here, except for maybe Mike McCann, who's been here during a rising interest rate market. So 2022 could shake up to be very interesting. It might finally, I shouldn't say finally, but our word of caution as a lender is always buy low because you don't want to lose money. And all those people that have been being saved because the market going up might change.
So not just removing the buying power of an interest rate increase, which is significant. I mean, but if you look at the logistical working of that on the back end, what that ends up meaning is that you have Wall Street money starts to not find our industry as attractive, and they start to shift their funds to other areas that are more attractive, because what you're doing is when you raise the interest rates, you're closing the spread that they can make. So right now, like most of your private money lending and stuff like that are typically Wall Street backed or bank backed. When you're bank backed, that means the banks, banker XYZ at a traditional bank, say Goldman Sachs, goes, hey, we have $100 billion we want to deploy. And this industry looks attractive right now because there's a nice big spread, right? There's a spread between getting 15% interest and deploying at 3%, whatever that is. So like there's a big spread there. So it's attractive. It's sexy. Well, as you close that gap, Wall Street money goes, we're going to shift our money over to electronics. We're going to shift our money into, so they're always moving into different, realms. Well, when you pull that money, that not only from the homeowner's perspective, from the investment perspective, we'll feel it first, because the investment perspective is the most speculative for Wall Street money. So your homeowners and your home buyers will not feel it as heavily. It'll be, where a home buyer might have a situation where an increased interest rate will drop pricing maybe like 5% or something. Whereas like the investment front of it, you'll have banks just simply pulling their money. It gets a lot more volatile if you're bank backed in private lending versus privately backed. So the volatility is much higher. So there's not just the interest rates go up and the buying power is gone. It's what happens on the back end with bank money redeploying their capital in other sectors. And when you start doing that, it changes the face of what's going on. Now, it's good and bad, in my opinion, because, well, not good and bad, but just because they pull their money and you have, companies like us that are, we're personally funded, you go, oh, that's great. But then you go, but you're also fighting against the grain a bit because the homeowner pricing is coming down. So you need to, even though there's it's very good for true private money in terms of just the influx of inquiries, you definitely can't be as aggressive as you were when you were in a situation lending against houses that were just going up and up and up. So
yeah, those 10% down payment days likely shrink.
Likely may never come back. I mean, I thought they were gone with COVID, but COVID was too fast. So, it started to disappear quickly with COVID. Like it was gone for like a blink of an eye. It was gone, like it should be. And then all of a sudden COVID opened back up and everything came back. I think it's like you mentioned, like if you had that COVID scenario over a 1 year period rather than just like 3 months, that whole face of private lending changes because you can't sustain. I mean, a company can't sustain under those conditions if they're built upon bank money. So it just the inner workings of their business just won't play out for that long. So, and I think it could be a while. Like it's like you said, like we've been going down for 4 years. So I don't know that we go back up to like 15%. I actually saw a post on Facebook this morning of 1985's chart of interest rates. Did you see that?
The 15 and 5 one?
It said rock bottom interest rates. It was like a sheet. It was actually a sheet they took a picture of because they didn't have it said 11.5 and 2 were your homeowner pricing. So if you're a homeowner, that was rock bottom rates in 1985. 11.5 and 2 would have been, where today you're getting no points, obviously, and 2% in your house, 3%. Right. So I see the market. I don't know that we go back up to like those rates in the near future. I also do believe in elasticity. So you could just pull the rubber band back. It's going to snap out that far. So it could very well go up there, or they just say, screw it, we're going crypto. And, but a crypto rollout. I think you mentioned this a couple of weeks ago is like no government wants to be the first to try that because there's too many like what ifs in that scenario, right? Like you're like, well, how do we deploy the capital so that we get our money back and interest rates on crypto? What do we do if this happens? Like there's so many what ifs that could just cause absolute catastrophe, right? And when I say catastrophe, I mean just pure shakeup, pure nothing.
Power shifting, right? So like,
yeah,
I think it would be very risky for the United States to do something like that right now. I think so. I think there's going to be a lot more that has to happen before they seriously consider it. But the fact that they're putting it on the plate of saying, "Hey, we're going to have a report on this," just shows that it's not being dismissed, right? Which is good and bad. Right? Like I probably would want all options to be investigated, but to me, it just seems like it's very intentional if we go that route. But
hey, Shanita, how are you? I mean, I think though a big portion of it is even with the power shift of digital currency, that there's too many like things you don't know what's going to happen. So like you're like, all right, on paper this is how it works, but there's too many things that even the government can't really. The government can control the dollar right now. Like you can control the pump of the dollar. Like so, basically, what can happen is that they make a mistake. They're like, whoa, we didn't see that coming. That's cool. Just print another like 5 trillion. Right. That'll they basically can cover up a mistake that they made or didn't account for by just printing. I don't know that unless they give themselves somehow the power with crypto to do that. I don't really know. I mean, if they were to actually pull it off with crypto, though, goodbye Bitcoin. Like if the government was able to make the transition, get people to trust it, and it was actually able to be the leading currency.
Probably part of the reason why Bitcoin went down about 4,000 points as well today. As soon as Powell said that, right?
Sure. I mean, it's gone, right? It's literally gone. If that becomes if the dominant crypto becomes the U.S. crypto, we'll be telling the story. Remember when crypto was a thing like 10 years ago? But it's also, I think, what you said the other day, which I think was a really good insight, which was the Chinese government was thinking about talking about they're rolling out their crypto. There's only so many shots you get at completely changing the power shift in the entire world, and if you're going to take a shot at a country, you don't need to do it with a bullet. You can do it financially. And because of the opportunity that presents itself right now in history, can that be done? And whichever currency I would say everybody flocks to and agrees with, that's the currency that will dominate the world. So it's really about consumer confidence. And I think it's like you kind of want the other guy to go first so you can see where they make mistakes and then you can roll out the better one. Because you really can't do it's really hard to take something like money and try to do a redo, right? Because you can't have a scenario where
the confidence.
What's it? The euro? Yeah, you can't have a consumer confidence loss because nobody knows what it's going to be worth, and then you can't be like, wait, we made a mistake. We're going to do it better like this. Like you might get a few of those in the rollout, right? But I mean, we're seeing it right now with the jabs, right? Like people rolled out with it, and it was like, whoa, this is it. Everybody's cured. It's over. And then it was like the percentage rate of like whatever. And then it was like redefine the word, redefine what the definition of it means. And all of a sudden people are like, wait a minute, what's going on with all this? So then the confidence gets lost that what's actually happening. So you only have so many shots to get it right at that level. And you obviously want to see somebody else do it first. So you can be like, all right, well, no, we know how to, I mean, it's like Facebook watched MySpace and they're like, eh, and then MySpace couldn't get you back. So, yeah, that's about all I got, though. I do think, though, this week is news every day kind of week. It could be that kind of week.
For sure.
And, yeah. So 33,600 looks like the end of times line. And do we get our Sanda rally? That'll probably be the topic tomorrow, Sanda rally. I like the word.
Sanda rally? We're currently at 34,500. So.
Wait, what? Oh, 34,500.
Yeah.
Oh, so we followed through on that. Okay.
Correct.
Yeah,
it didn't fully. You know what I was thinking? So right when Powell, walked away, it was done. The market goes back up. So I'm like, he probably just said, all right, pump some money back in. Right? Like he has the power to do that.
Yeah.
He's like, all right, pump, get the inflation back up so I don't look like an idiot.
Yeah, by the time my foot leaves this stage, I expect $3 trillion to be put into the market.
Right.
Interesting combo. Thanks, Shanita. Yeah, if we're at 34,500, let me just mark that. I mean, we're there. And the major thing on your screen is exactly what I said earlier, which is we're going to clear out these infractions, clear out these lines. We're going to clear out business and get to the real business, which is right here. This is the real business. And that is also, is it unbelievably incredible how technical analysis works? How are we looking at a chart where the exact horizontal support and resistance line is exactly at the Evergrande low? So when you have a scenario where so they call this in technical analysis confluence. So you have confluence of like multiple things that are important lining up at the exact same time. From a perspective of like conspiracy theory, you go, how is that possible, right? Like, how is that possible? But you're looking at a scenario where the all-time trend line, like end of days trend line that is coming up off here, is also about to line up perfectly horizontally right here to the Evergrande mark on the last pump. So they're basically all your positions at Evergrande and all your positions at the all-time line are going to go bonkers when you get here. And that is how you make a huge move, good or bad, but that's how you make a big move. So it's not, why is that line not like down here? Why wasn't Evergrande down here? It's right. It's spot on, right? It's spot on in this circle. So I don't know if it's this week, but it will be something interesting when we hit this line. Something very interesting will be in the news, and I think it's coming sooner than a few weeks, right?
Well, we're going to be here reporting on it, right?
Yeah, okay, that's fair. Yeah, as long as internet and electricity still work in a few weeks, we will be here.
Yeah. I mean, honestly, I think when we were doing the show before Black Friday, Red Friday, it was looking like, all right, if it just kind of touches that blue line, goes back to all-time high, I don't know, maybe nothing's going on. But the fact that they decided, nope, we're going into these lines is like, great, our show's back on, right?
Yeah, right when everybody takes their hands off, we felt on the way back up, everybody kind of took their hand off the wheel. On the way back up, it was like, all right, blinders back on, everybody just chill out. Shanita asks, so are we in a recovery or stabilization?
That's what we're trying to find out right now.
Yeah, I don't think either right now. I think we need to see if we need to enter into a recovery or not based on when we get to that line. And as far as a stabilization,
I don't know.
I think we're going to look back and realize this was the most stable in terms of like living like conditions. I think we look back at this time. I think this may be the golden time in history. I know it sounds crazy because everybody, no matter how high or how much money people make, they have something to complain about in general, right? So, but I do think everybody looks back and goes, "Wow, remember when that happened?" Because everything was really, really easy. You just bought some stock and it went up, and now everything's crazy. So, that's my opinion. I think we look back and realize this was the good time. Just what I'm saying.
Well, I hope living wise it's remained stable. That's for sure.
Yeah, that's fair.
But I mean, in terms of what's going on with this economy, I don't think it's fair, or I don't think we can say it's in recovery or stable because it totally depends on who you are. I mean, there's a lot of people still hurting from COVID, right?
That's true.
And then there's a lot of people who made a ton of money off of COVID, Mr. Bezos. But and that's not a knock on Bezos. I don't care. You provide a service like that, like.
I'm pro Bezos. I'm pro Bezos. I don't. And anybody who orders anything from Amazon, I don't care what you say. You're pro Bezos.
I agree. If you order a single thing from Amazon, and I don't even knock on the billionaires for the amount of taxes they get around. If the government proposes a plan that's like, hey, we will get out of debt if we do all that XYZ, then maybe we could be like, hey, billionaires, can you chip in? But honestly, if we took 100% of the billionaires' money or trillionaires' money, it doesn't matter because we're printing another 3 trillion tomorrow. So what's the point, right?
Well, I mean, and it's like Elon Musk said, sure, I'll cure all the world hunger if the money that's being used is open accounting, open accounting practices, right? So like it's an impossibility. Everybody thinks that throwing money at something is necessarily going to solve it. But Elon Musk that comment was the best comment. It's not just putting money on something. It's how do you use the money that I'm giving you? It's like giving somebody like a pile of gold or or giving somebody an ocean full of water that is drinkable water. And you go, well, how do I drink it? If you don't know how to drink the water, it doesn't matter if you have that ocean in front of you. So if you have a pile of money, if you don't know how to use it, you can't remedy the situation. You still have
or even how do you distribute it to the people in the middle of the country, right? Like,
sure,
there's got to be a method. So Aaron has said he's more interested in Mrs. Bezos, Mrs. Bezos. So I don't even know what that means, Aaron. If you want her to, if you want her to pay taxes, is that what you're interested in?
I feel like she runs the show. Wait, Mrs. Bezos, X.
He said X. I don't know. I feel like all billionaires are getting divorced
instantly. The richest woman in the world upon divorce. Did you know that? Upon divorce, richest woman in the world.
Is she taking any pool boy applications? I mean, that is probably the highest paying job out there. That's a non-CEO job, right?
Oh man, I just got like a terrible visual of like Aaron in a banana hammock and like one of the pool strainers. Yellow. It's probably yellow banana hammock too.
Banana hammock.
Yep, this is the money show, ladies and gentlemen. Okay, so good enough. Aaron has contributed his usual today, which we greatly appreciate. And
we were waiting for that. We couldn't end the show.
Yeah, we couldn't close the show until Aaron jumped on. So we'll see if the Sanda rally is a thing.
Alrighty, check in tomorrow.
All right, goodbye.